So you all know the tax code is ever changing. It's constantly changing. So instead of waiting until it's time to file your taxes and being shocked by the big differences, keep your ear to the streets, my people, so that you know how to adjust before the tax year ends. Can you believe it? It's November already, 2022, and we're coming to the end of the year. December 31st will be here before you know it, and all of your tax documents will be being wrapped up by your employers or various entities, your 1099s, and they will be in your mailbox before January 31st. And it's going to be time for you to file your taxes. So I want to share some things because the last couple of years have been unprecedented, right? The last couple of years have been unprecedented, and some things have happened that the tax code has adjusted for moving forward. Case in point, the main thing I want to share with you guys to give you a heads up, I told you keep your ear to the street, that last year for 2021, and this was specifically for 2021 only, the child tax credit was adjusted. And so they expanded, the IRS expanded the child tax credit in light of the pandemic that we were in the midst of. And historically, where the child tax credit was up to $2,000, they expanded it for two different categories. So for children ages, what was it, up to age 6, they gave a child tax credit of $3,600. And then for children ages 6 to 17, the child tax credit was expanded to $3,000. Okay, so it went from $2,000 to either $3,000 for older children and $3,600 for younger children. Well, that was for 2021 only. In addition to those child tax credits being increased, they did an advance on those amounts. So half of those amounts were given to the parents that claimed these children as dependents on the tax returns. They had an advance from July to December, a monthly amount of half that child tax credit. And then the other half was included on your tax return when you filed it. Well, understand and know, of course, we know there have been no advances this year so far. And the amount of child tax credit, there has not been any new tax updates letting us know that those dollar amounts will remain in effect for tax year 2022, which we're in right now. So I want you to know and readjust, because a lot of people ended up getting larger tax refunds because of the expanded child tax credit. So make sure and understand and know that as it pertains specifically to the child tax credit, those people that have children, your tax returns may be leveling off to what they were looking like years before 2021. All things remain the same, right? If your income and other things are about the same amount, then you can expect them to return to about the same type of situation, not that inflated amount. So here, and that's leading into the next topic that I want to talk about, is for everybody to check your withholdings, because I know what happens. I do taxes. I've been doing taxes for a long time, and a lot of people, a lot of y'all play games with those withholdings, bumping those withholdings up so that you can get more of your money throughout the year. And listen, this is a no judgment zone. I'm not judging. I'm not passing judgment at all. But what I am doing is passing awareness. I want to bring awareness that, hello, we're coming to the end of the year. I've heard so many times people say they forgot that they needed to change it back. Well, here's your reminder. If you change your withholdings to more than what you're going to end up claiming on your tax return, then you might want to make an adjustment. Okay. Then also, if your income increased, or maybe some of your children are getting older, just check your withholdings and make sure that your withholdings are in line with the amount of people, the number of people that you're actually going to be filing on your tax return. Okay, talk to your tax professional, get some help if you don't understand how to make sure that you have the proper withholdings. There's also tools and calculators on IRS. The IRS is the source of truth for me. IRS.gov. So you can go up on the IRS.gov and they have withholding calculators that you can put your information in. You want to pull up your last pay stub just to kind of know. But what the rule of thumb that I always use when someone gives me their W-2, I automatically look at the income in box 1 and the withholdings, federal tax withheld in box 2, and that amount needs to be at least 10%, at least 10% of your income. So you can look at your W-2 and look at your year-to-date earnings, and then look at your federal tax withheld, and if that amount is nowhere near 10%, you're under withholding. So you might need to make some adjustments. That's just a rule of thumb. It's nothing set in stone, but it is a good rule of thumb to go by. It really should be higher than that, but anything less than 10%, you're in a danger zone, and that's not where you want to be. Okay. The next thing I want to talk to you about is my favorite, the HSA. We're in open enrollment season, people. So when it comes to choosing your new medical plans, I always encourage you to look at the high deductible health plans. High deductible health plans, most of them come with a corresponding HSA, which is a health savings account attached to it, not the flexible spending account, but a health savings account. You want to make sure that you're taking a look at the high deductible plan with HSA attached to it, because that in and of itself is going to give you some tax savings. Okay, so going into not necessarily for this year, but for next year, that's a forward thinking play to make sure that going into the new year, that even if you have withheld or you're looking for a better bottom line than what you've historically seen, then the HSA is a way to do it, because those contributions are made to your HSA plan through payroll deduction. So it's money that comes out before you even receive your check, and then also you it's a tax deduction, and then whatever goes into that account, any qualifying medical expenses are paid out of the HSA account. So that's money that you never pay taxes on. In addition to the fact that there's an investment feature attached to the HSA account. So once you build your HSA account up to a certain dollar amount, then you can invest the difference of those funds. Kind of like an IRA account, if you put yourself in the mind of a traditional or a Roth IRA account, and once you put those dollars in there, you can invest those funds. You can do the same thing in HSA once your HSA gets to a certain amount, so you can grow it even faster. And it's not a use it or lose it plan. It's something that goes with you, whether or not you're still with that employer or you moved on to another employer. And for my self-employed people, if you're purchasing a health insurance plan independently on your own, you too should be looking at a high deductible health plan with the corresponding health savings account attached to it. It's worth its weight in gold. I live by it. Okay, and so the other thing I want to talk about, which again is a nice segue, is the contributions that you make to your retirement savings, whether it's a 401k, a traditional IRA, a SEP IRA, a simple IRA, whatever those retirement plan accounts that you have associated with whatever level of service that you're doing, whether you're a W-2 earner or whether you're an entrepreneur, then money that you contribute to a retirement savings plan can be done pre-tax. So that's going to lower your tax bill. So you want to definitely not leave that money on the table, especially if your employer is matching it. Those contributions, that's low-hanging fruit. Maybe you've heard that terminology before, but it is low-hanging fruit, which means that it's something that's easily attainable. So you don't want to overlook that. You don't want to gloss over that. You want to go ahead and take advantage of that. People are always saying they don't want to pay so much in taxes, but a lot of times we're looking over or glossing over some of the very basic tax strategies that's put in place to help us make sure that we can lower our tax bill. So you want to make sure that you take a look at the retirement savings account that is available to you. Again, whether it's 401k, a traditional IRA, a SEP IRA, and those types of things. And so those are the things that I wanted to share with you on today. I want to make sure that you understand and know that Tried and True Financial Services is here to support you in your financial endeavors. We are established to help entrepreneurs with the ABCs of finance to simplify your accounting, budgeting, and credit processes. So if you missed this replay, if you missed this live recording, make sure that you go back and watch the replay. I encourage you to go ahead and follow us on YouTube. Our channel is under Valise Smith, and you can go on and you can watch the replay for this video to make sure that you understand and know that once you get ready to go back and look at your finances, you can come and take a look at this and make sure that you know to take a look at the child tax credit and make sure that you understand and know about what's going on with your tax code, that you're looking at the medical savings plans going into the new year, that you're looking at high deductible health plans with the corresponding HSAs, and also that you're looking at your retirement savings account to make sure that you're maximizing those. And while I am rambling on, I want to take some time to go into my comments and see if I have any questions or concerns. If you have any questions for me, make sure to drop them in the chat. I'm always happy to answer those. This has been your weekly segment of Tax Tip Tuesday with none other than your girl, B. Valise Smith, with Tried and True Financial Services. Our core mission is helping entrepreneurs with the ABCs of finance to simplify their accounting, budgeting, and credit processes. Each week, we'll be coming to you live to share some tax tips, but also make sure that you watch the replays. Make sure that you, if you're watching a replay, that you drop in the comments #replay so that I know that you watch the replay. I'm always coming back looking for questions or concerns for future topics so that I can bring that knowledge and awareness to you to help make sure that you're managing your finances as well as can be expected. So I appreciate you joining me for this week's segment of Tax Tip Tuesday. It's been real, and make sure that you go ahead and follow us on YouTube at Valise Smith. Be sure to like, comment, and share on all social media platforms. It's been real. We enjoyed it. As always, take care, and we'll talk to you on next week for our next segment of Tax Tip Tuesday. Have a good night.